Good morning, everybody. How's everybody doing today? Have a good weekend, I hope. Feeling good about the world. Ready to take on these markets head on with an advantage every time you trade. That's what we're doing today, guys. Each and every day, this is our goal. Good morning, Luciano. Good morning, Alex. It's good to see you guys today. Hope you're doing well. Hope you had a good weekend. Had a great one here. Feeling relaxed, feeling motivated. I don't know about you guys. Good morning, Daniel. I'm ready to go. I'm ready to follow some rules, make some money, ready to have a plan that puts me in the best position. Had a great weekend, did a lot of market replay with Nexgen Jen. We had a blast. It's always fun. Market replay with someone you love. It makes it a little more interesting, I think. Guys, my name is Mark Novak. I'm kind of slow rolling in. It's just now 9 o'clock. If you are brand new to the Nexgen classes here, brand new to the education, welcome. It's nice to have you. I'm going to set these charts up so it's only 2 charts that you're looking at because we're going to keep it simple, guys. We are going to focus on simplicity, the best of the best, giving yourself the highest chance for success. That's the goal each and every day. But before we get rolling, before you guys start looking for trades, for rules to be met, before you start gauging those advantages, I'm a big fan each and every morning. I'm going to go to forexfactory.com. And I'm just going to look and make sure that there's not any news that's going to make the market act erratically, that's going to make it jump out of sorts. And today, Monday, December 12th, really nothing going on until 1:01 p.m., the 10-year bond auction. 2 p.m., there's a federal budget balance. Good luck with that, right? Have they ever balanced the budget? And then tomorrow morning is what we're really looking for when we look at news. Those high impact, those red boxes, those are the ones that can make the market go a little bit crazy. It can spike. Not unheard of to watch the S&P go 40, 50, 60 points in a matter of seconds. And you don't want to be in front of that. So every morning, just checking news, making sure you're in a good spot. Guys, if you go to the NinjaTrader, you'll see that today is the equity index roll date. And I brought up, nope, I thought I had a market analyzer. I didn't. You should be, I brought a picture up earlier. You should be on the 323 contract for the S&P. If you're not, you're going to find that your 1222, first and foremost, doesn't match up with what I'm doing. You'll also notice that it's probably a little erratic, a little choppy. So make sure that you're on the most current date with the most current volume. If I go to my control center, I can make a market analyzer. And guys, this is all, I'm going to show you where to find this if you ever want to do it. You can gauge where the volume is. So let's go to the 323 contract. And then let's also go to the 1222 contract. They're close. They're a little bit split, but that 323 is taking the lead. You'll notice that price is 33 points difference though. So if you're looking at your 1222 and you're wondering why we don't line up, it's because I'm on 323. From the education page or from the Nexgen T3 page, if you go to the resources, John has updated the installers to load in that 323 workspace for you if you're not comfortable doing it on your own. But from the education page, guys, there's 2 places to look, and this is where everything kind of comes to life for you. The first is a software user guide. This is your NinjaTrader how-to, and if you scroll down just a little bit, there's your add symbols, roll contracts. So I always encourage people, learn how to do this. Give it a go yourself. If you break something, we'll fix it. But give it a try. It's important to understand how to use NinjaTrader. It's not just reading the software. You want to be able to work well with the platform that you have, just because If something goes wrong, you want to be able to fix it instantly. So this user guides your NinjaTrader how-to. Connecting to your live account, closing workspaces, opening workspaces, being able to scale charts, setting in stops and targets. All this is covered in the software user guide. All of that is available right from the education page. And then this is where the magic happens, guys. This is the tutorial section. And I want to focus your attention on the last 3 words. Guys, give me a Y if you can hear me in the room. Anybody beyond Michael? All right. Michael, it may be you. Thanks for that, guys. Every time somebody says they're not hearing something, I panic. I'm like, oh, have I been rambling? And I've been known to do it, guys. I have come in and given the smartest lessons ever with my microphone muted. So if you ever come in and don't hear me, make sure that you let me know as soon as you can. Awesome. Thanks, Bobby T. Guys, I appreciate all you jumping in there. Lets me know I'm not alone, right? All right. So the tutorial section, building a foundation. What a strong 3 words. Might be a speaker setting. Okay, right on. Creating a solid platform from which to grow, guys. Your house has a solid foundation. The office building you work in probably has a solid foundation. I live 300 yards from a lake. The house I'm in right now does not have a solid foundation. There's cracks in the walls and the doors don't close, but it sure is a nice view. But that solid foundation is what's going to get you to where you want to be, guys. And when we talk about this classroom, when we talk about my demo users, and we're really looking at getting the absolute best of the best, and guys, this isn't just the demo users. There is no doubt in my mind that there's at least 5 or 6 people in this room that have said to themselves, man, I just want to be consistent. I just want to make money consistently. And then they commence looking for every trade possible, trying to catch every move, trying to be the first one in, trying to be the last one out. We're going to talk for the first 30 or 45 minutes, guys, about the high probability trade. The high probability trend trade, this is your best of the best. This is when each and every one of your indicators lines up for a trade. Strongest triggers, nothing in the way, best entries. Everything, everything, everything. I think doesn't always mean failure. Not always. Depends on what you're talking about. Ken, if I think you're a nice guy, I'm doing all right. But if I think the market's going to go up because that's where I want it to go, well, that might be a little detrimental, right? In trading, I think. Absolutely. So what do we switch I think with? Rules met? Rules not met. Guys, it sounds simple, right? How easy is that? If your rules are met, take a trade. If your rules aren't met, stop taking the darn trades. And that's the biggest thorn in the side for people learning to day trade, is you go from rules met to, just like Ken said, I think. And I think turns into I hope, I wish, I want, when if you just focus on rules met. So we're going to talk about rules. And guys, I'm going to show you the most simple approach to getting into the markets. The one that will take you, I don't know, a week and a half to be able to nail your entries. And I know this because we're going through the learning process in the house right now. And it took Jen about 7 or 8 days to really get comfortable with her entries, and she's nailing her entries right now, 100%. And then we'll start to work on management. But nailing those entries, guys, for the first 30 days. If this is your first 30 days with Nexgen, this is your plan. If you have been with Nexgen for 10 years and you're still not consistent, you're struggling. If you've been day trading the markets for 8 or 9 years and you're not hitting your goals, maybe taking a little bit of that humble pie, allowing yourself to be a student, allowing yourself to be new, and focusing on the best of the best for 30 days it just may put you in an amazing position. So the first 30 to 40 minutes of class, guys, we're talking about the one simple trade that repeats itself on every market so you can be a trading success. This is the high probability trend trade. This is every indicator on every chart lines up for the trade. And we're talking about building a foundation. Why do we want the trade where everything lines up? Why do we want the trade where we have every advantage? Well, one, because this is a trade that's been proven to win 70 to 80% of the time when you take it the way you're supposed to take it, which means that there's an awful lot of memory of success. That success breeds confidence. That success kind of extinguishes the fire of doubts, of anxiety, of fear, because you get accustomed to winning with the best of the best. But more importantly, this first 30 days, focusing only on the entries of the high probability trend trade, is going to teach you to read your charts. And 90% of what we do, guys, is just chart reading. 90% of the time, I'm reading my indicators and I'm looking for advantages. 10% of the time, I'm turning those advantages into a high probability trend trade. So this goes back to what we just said. Either the rules are met, rules provide advantages, rules provide an edge. That edge is what tells me it's time to take a trade. Or the rules aren't met, those advantages aren't present. But your chart reading is going to teach you to identify them. It's going to teach you to recognize where the market is likely to continue. And you're going to use those continuation points for entries for your high probability trend trade. It's going to teach you where the market is likely to go. You can make educated choices based around your profit targets when you know where the market is likely to go. And then where the market is likely to stop. This is going to be a giant waving red flag telling you that a trend may be ending. Don't trade here. And this is what we call termination conditions. So your high probability trend trade is going to give you the ability to read your indicators. Your ability to read your indicators, and guys, for you adrenaline junkies that don't want to just focus on one trade, your ability to read your indicators is going to take you to the medium probability trade. And this is defined as when most of your indicators line up for a trade. However, a small issue exists. Your ability to read your indicators is going to help you identify that small issue. And this will be the vast majority of your trades. When executing medium probability trades, you'll take these trades and manage them assertively. Your ability to read your charts is going to allow you to manage them assertively. If there's trouble in your way, you may take a portion of your position off at that trouble spot. Your ability to read charts is going to help you identify that trouble spot. And then you can reduce to a zero loss level. So we're going to focus on the high probability trade, that trade that wins 70 to 80% of the time. And your ability to recognize, to understand the high probability trade is going to take you to the medium probability trade. And this is where, oops, I'm missing my charts. This is where I encourage all of my new users, all of my old users, keep it simple. Allow it to be simple. I'm sorry if this scrolling is giving anybody a headache, but I need to get to a very specific picture. There we go. Stay. It won't stay. That's kind of funny. Go to my editor. There we go. Two charts, guys. We're going to keep it simple. Some of you are trading a 34.5. Some of you are trading a 21.3. Some of you have an 8 range, a 92nd. You're trading a 13 range. You're telling yourself that if I pack this bag full of as many indicators and time frames as I can, surely there's an advantage. Well, there probably isn't. And stop calling me Shirley. Guys, we're going to focus on the 13.2. This is going to be the first chart that you look at when you're keeping it simple, going for that best of the best. 13.2 is like a broad stroke of a brush. On the 13.2, you're going to recognize the overall trend, and that overall trend is very easy to recognize. If the background on your 13.2 is green, excuse me, you're in an uptrend. And you're only looking for high probability trend trade rules for longs. If the background on your 13.2 is red. You're in a downtrend. You're only looking for the rules to be met for high probability trend trade short. On the 13.2, you're going to gauge the overall momentum of the market, and that is rule number 1 for a high probability trend trade, rule number 1 of 3. You're also going to be able to recognize where the market is likely to stop, those termination conditions. Rule number 2 of 3 for a high probability trend trade. Guys, you're going to get 66.6% of the information that you need on one bar, on this broad stroke of a brush, this big slow chart. When you get the rules met, rules 1 and 2, then you're going to turn your attention to a smaller, faster chart, to a 5-1 chart. This is where you're going to refine that broad stroke of a brush, and you're going to recognize your best of the best spot for entry, that area where the market is likely to continue. By doing so, it's going to allow you to reduce your risk and maximize your profit potential. So you guys that don't want tiny moves, the same thing that we teach in class, you can use a 21-13 combo, right? You can use a 34-21 combo. This is going to work on all time frames. This is going to work. It's the patterns that we teach that are going to work on any time frame. It's the patterns that we teach that are going to work on any market. If you want to trade Apple stock, no worries. If you want to trade Ethereum, no worries. You can do it. But you have to learn these patterns first. You have to understand the advantages present so that you can make good decisions about whether or not you enter the market. So only 2 charts. And guys, there's only 3 rules. This is your high probability trend trade, guys. This is the trade that typically wins 70 to 80% of the time when you follow the rules. And you know what? I believe 1,000% in this methodology. 2 weeks ago, I focused only on the high probability trend trades, and I took a very, very conservative management approach. Did all right. Last week, I did the exact same thing with a little more money management, same winning percentage, more money made. And this week, I'm doing the same thing as last week. So we'll see how it works out. So far, I'm in a pretty good spot. It's only Monday. So trend trade rules. Rule number 1 on the 13.2. After a breakout of Fibonacci or after a new top or bottom causing a full reversal, the small triggers must be strong and located outside of the large trigger lines to look for trend trade rules 2 and 3. Guys, rule number 1 simply says I need strong triggers. And if I don't have those strong triggers, stop looking. Stop looking for trades if you don't have the advantage. Ed, I missed a couple days of trading, but I think I was up, goodness, if I count Friday, I was up 4,000 or 5,000. I was somewhere around 76% winners on simulator, guys, going through. So what I did is I incorporated some money management. Initially, I kept it very, very mechanical, very methodical, and then I started letting some of them run when my indicator said I could. Guys, every now and then you have to do this. You have to go back to the most simple to remind yourself that that's where the winning happens. And each of you are going to confront that little voice in your head that tells you that you need more trades. You're going to confront that little voice in your head that tells you that you need to be in a trade even though the rules aren't met. And when you go back to simple, when you commit to simple, it shuts that voice up. Trust me on this one. There's a reason that I did what I did, because I'm human just like you guys. And every now and then I trade what I see instead of my rules. So I refocused on my rules. So rule number 1 is strong triggers. Rule number 2 says don't trade in any Fibonacci areas that are expected to hold. Termination conditions section, guys. We're going to cover it. Wait for the area to break before continuing to take trend trades in the established direction with strong triggers. Rule number 2, and I'm going back and forth here because I've made it a little more simple than all that wordiness. Let's keep it simple, right? 2 charts, few words as possible, no termination conditions. Rule number 1 says strong triggers. Rule number 2 says no termination conditions. Rule number 3 tells me how I'm going to enter the market. And I'm going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. That means that I'm going to use a limit order. I'm going to wait for the market to come to me. And I'm going to buy or sell a pullback, meaning that if the market's going up, it has to come down to me. And that entry is going to be at an area. Areas can be fibs, midbands, or 1-to-1s. And that area is going to be inside of favorable large triggers. So guys, rule number 3 gets us in. Rule number 1 gives us the advantages that it tells us it's time to look for an entry. John had some great pictures over the weekend he put together. We're going to talk about strong triggers. We're going to talk about nothing in the way. We're going to talk about our entries. And after we go through it, I'm going to give these pictures to you. And you're going to be like, oh, Mark, that's so simple. And I'm going to say exactly. Keep it that way. Don't make this simple stuff hard to understand. Rule number 1 says strong triggers. What are strong triggers? Well, in an uptrend, when the background is green on the 13-2, the small trigger lines break above and away from the large trigger lines. And guys, it's this space created that lets me know that the odds are favorable for the market to continue up. In a downtrend, when my background is red on the 13-2, my small trigger lines break below. They accelerate away from the large trigger lines, which are wide and angled in the direction of the trend. And once again, it's this space created between the two that lets me know that the odds are favorable for the market to continue down. So guys, if we're trying to define what's the advantage that rule number 1 gives us, rule number 1 gives us the advantage of momentum, gives us the advantage of a market that is likely to continue in the direction of the trade. This advantage doesn't last the duration of a move, guys. Small trigger lines accelerate away from the large. I begin looking for opportunities right up until they return. Because when those trigger lines return to the large trigger lines, when they work their way inside, this is what we call a weakening of the large triggers. And when you weaken large triggers, anything can happen up or down. If you're not winning consistently, if you're learning the software, doesn't it make sense to give yourself the advantage of strong triggers, the advantage of odds favorable momentum, and not rely on a situation where anything can happen up or down? These are questions that you have to answer for yourself. In a downtrend, it's the same thing. The small accelerate away, that space is created right up until they return. This is your best of the best, and this is the range where you're going to look for high probability trend trades. When you have that strong trigger look, and you see these tails or these wicks on your 13-2, you'll see these after the fact, guys. But these are all potential entries for a high probability trend trade short. These are all potential entries for a high probability trend trade long. But it begins with the advantage of strong triggers. Give me a Y in the room if you're with me. I'm going to commit to the advantage of strong trigger lines. I'm going to commit to momentum that says that the market is favorable to move in the direction of the trend. Cool. Rule number 2 says don't trade into termination conditions. Well, a termination condition is a Fibonacci-based indicator that may reverse the market. And I like the language on this one. It may reverse the market. Guys, there's no guarantees that it's going to reverse the market, but it may, which means that if we trade into one, we've taken away our advantage. We determine these termination conditions with a comparison of the trigger lines to the area. The areas can be Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots. Can be a cyan divergence low line, a magenta divergence high line, large chart midband if the large triggers are a full bar away, or any third divergence in the same area. Remember, we're looking for termination conditions on the 13-2. That's where we're going to compare these areas to the trigger lines. But those 3 divergences in the same area, this is your chart reading. This is a phenomenon that you're going to see on your smaller, faster chart first, and it's going to let you identify change happening on the 13-2 before you see it on the 13.2. So let's start with how to identify a termination condition, and it's a pretty simple recipe. Let's take that picture so I can mark it up, guys. I try to share this picture every day because I think that it's important to have this one. In order to recognize a termination condition, two things happen. The first thing, price reaches an area, meaning the price bars get to a fib, one-to-ones, divergence lines. Price reaches an area. The second thing that has to happen, and it's pretty simple. Where are my triggers? Guys, this is it. This is everything that you need to understand how to recognize a termination condition. These price bars come down and they reach an area of support. Your job is to ask yourself, where are my trigger lines? Well, if all of your trigger lines remain above the area of support, you've reached a termination condition. No more looking for a high probability trend trade short because you've reached an area that may reverse the market. You see it up top as well. Price comes into this area of support. None of your trigger lines have broken through yet. Guys, it's time to hit the brakes. Rule number 2 gives you the advantage of a clear path. Rule number 2 gives you the advantage of absolutely nothing in your way. Rule number 2 tells us, wait for an area to break with strong trigger lines before continuing to trade in the established direction. This support that may have reversed the market initially, if it ultimately breaks, small triggers and large triggers break through the area. You can see support begins to behave as resistance. When that happens with odds favorable momentum, guys, it's time to look for the trade. This is your high probability scenario. The market is either likely to stop the market or the area has been broken and it's time to look for the next trade with that odds favorable momentum. Your ability to read charts is going to take you to the next trade, guys, and that's your first medium probability trade. It's a 50-50 trade. It means half your triggers have broken, half have not. What does that mean? I'm having trouble typing today. It means when you have a 50-50 trade, your small triggers have broken through an area with odds favorable momentum. Your large triggers have not. It doesn't mean that you have a 50-50 chance of winning. It doesn't mean that there's a 50-50 chance of it holding. What it means is that half the triggers are through and half are not. It's just, you could call it a straddle, a one above, one below, whatever you want to call it. But what this means is an area has the potential to break, but is not broken, meaning that you don't have a clear path. You have the ability for that path to be cleared. When you have this one, your 5-1 entry conditions must be perfect. No divergence, no losses of momentum, strong triggers, and a small window of opportunity. And I'm only going into this 50-50 scenario on this picture because I want to give you the picture. I want to take that one and pop it in the room for you because I think that this is one that you should save. Guys, clear path is your biggest advantage every time. Clear path is the one that's easy to recognize. Clear path is your highest probability trade. But remember, we're going to work our way outside of only high probability trades. So I wanted to give you something that you can study as you move forward. Let's look at some other termination conditions. Let's see if I can. My computer's a little wonky today. It's doing some Monday stuff. Here we go. Remember that there's a recipe to determine a termination condition. Price reaches an area. Guys, price reaches support up here. Trigger lines break through, not with odds favorable, but trigger lines break through. This pivot, this spot in the market where the market goes from down to up, this is just a pivot. And this pivot happens to have divergence, meaning that there was a loss of momentum. There was a loss in downward pressure when this pivot was made. It creates this cyan line. It's not until price comes back and reaches the cyan line, and I ask myself, where are my triggers? Well, all of my triggers have remained above. Now we have a termination condition. And this is what we call a pivot stop out of a prior divergence line. It's a very powerful condition. Price will exceed that cyan line just a little bit. This is a very key point in the market. This is where your buyers allow the sellers to push just a little bit beyond that area, and then they unload both guns. Stopped out those initial people, and then they run. This is a termination condition that creates a full reversal. A termination condition that creates a full reversal is a strong bottom or a strong top. So in this case, this full reversal leading to odds favorable momentum has created a strong bottom. In this chart, this pivot stop out at resistance, price reaches these areas. Excuse me, just one second. Sorry about that. I was being held hostage by a sneeze. My YouTube listeners may have heard that one. My apologies. Price reaches the magenta line, exceeds it, drops below, happens to be at Fibonacci areas as well. Hey, Nexgen Ben, nice to see you. Guys, this is a pivot stop out of a divergence high. This is a strong indication that the market is likely to reverse. This is a termination condition that keeps you from looking for any long trades. When it creates that full reversal, the large trigger lines go from green to red. We get odds favorable momentum. This is a strong top. And if you remember from your first 30 days and beyond, focusing only on the 5-1 trend trades that happen after a termination condition on the 13-2, that's your best chance of success. So you can identify these termination conditions and wait for that reversal, wait for that odds favorable. I like this picture because price reaches resistance. When it does, you ask yourself, where are your trigger lines? The only answer is they all remain below resistance, therefore there are no trend trades long. But then price pushes all the way back to support. All your trigger lines remain above the area of support. And in this case, your large triggers are a full bar away. Very powerful pattern in the markets. When your large triggers remain a full bar away, price loves to close the gap to them. This is how we identify mid-bands as termination conditions. I can't go long into a termination condition. I can't go short into a termination condition. 90% of what you do during the day is simply reading your indicators, waiting for the advantages. The advantage comes when this pivot stop out creates a full reversal and gives you odds favorable momentum. And the rules are in order for a reason. Here you see smalls below the large. The large are wide. They're angled in the direction of the trend. Rule number 1 tells me without question that this is a market likely to continue in the direction of the trend. Rule number 1 has been met for a high probability trend trade, and the average trader gets very excited about looking for an entry. But then it reaches this area of support. When it reaches this area of support, you're obligated to ask yourself, where are my trigger lines? Hey, Gary, guys, everyone can hear me? Gonna ask again. Here we go. Let's do something he'll recognize. 5 by 5. Loud and clear. Price reaches these 1-to-1s, all of the trigger lines remain above. It's a termination condition. No short trades, and you can see how the market bounces up. Rule number 2 gives us that advantage of a clear path. And then guys, when that termination condition creates a full reversal, gives me odds favorable momentum, there's your best of the best. That is the highest probability trend trade that you can take. Guys, give me a Y in the room if you're with me. Price reaches an area, where are the trigger lines? That's your recipe. Practice it. Go back. Take pictures of it. I can tell you that new users, one of their most difficult rules to follow in the beginning is this one right here, because this is the one that keeps you patient. It keeps you from trading into a brick wall. Sometimes everything exceeds the area. All the trigger lines, the trend is down, everything's gone through, but the market seemingly reverses and heads the other direction. Guys, this final termination condition that you're going to see on your 5-1 faster than you'll see on your 13-2. Remember, smaller, faster chart. 3 divergence in the same location, same price range may terminate the trend. Divergence is just a loss of momentum. The market is pushing down, momentum isn't following. Market is pushing up, momentum isn't following. And I know that divergence is true when this negative number prints. Doesn't matter what the number is. And a cyan line from a low or a magenta line from a high forms. Just means that we're losing momentum. When I lose momentum 3 times, it may terminate the market. Becomes more powerful when my small triggers go from odds favorable to anything can happen. Makes that termination condition on a smaller, faster chart even more likely to reverse the market. And then when my third divergence creates a pivot that's higher than the previous from a low or lower than the previous from a high, guys, that's the one that says, hey, this market's probably going to push the other direction, even momentarily. We talked about high probability trend trades, right? Having every advantage. And eventually your chart reading is going to allow you to take medium probability trades, to manage, to be assertive. If I enter at this area right here, this is a medium probability trade. I can identify my first trouble spot through the use of a divergence low line. I can recognize 3 divergences in the same location to get out, to minimize risk. So I'm going to use my chart reading, and especially on these 5-1 charts initially, to begin to take these these medium probability trades as after my first 30 days, after I learned to take my entries, after I learned to read my charts. So rule number 2 gives you the advantage of a clear path. Rule number 1 gives you the advantage of momentum. Rule number 3 is where the magic happens, guys. Rule number 3 is going to allow you to pinpoint with pretty amazing accuracy where the market is likely to continue. And when rules 1 and 2 are met on the 13-2, this is exactly what your 5-1 is going to look like. If we're in an uptrend, you're going to have nothing but up bars on the 5-1. And you're going to have this moment, this fear of missing out, where you're like, oh my gosh, they're going without me. This is horrible. How am I going to get paid? Everything's going up. This is the point where you make the decision. My rules are met. It's time to look for an entry. And you're going to focus your attention on these large triggers on the 5-1. And if they're up and they're strong and they're at those areas, fibs, mid bands, 1-to-1s, this is going to be your area to watch. The rules say that I'm going to buy a pullback, and a pullback means just a small retracement in price, counter to the underlying trend. I'm going to buy a pullback at an area, fibs, mid bands, 1-to-1s, inside of favorable large triggers. I'll show you exactly what favorable large triggers look like. Your large triggers, your synthetic triggers will be trending one on top of the other. Guys, this is your best of the best look. When you're looking for an entry on the 5-1 chart, let your large, let your synthetics be one on top of the other, the best of the best. Because when they are, it's ultimately going to create a smaller window of opportunity. So with everything going up, we have to wait for a pullback, and a pullback begins with a reversal bar. All of these up bars, you're waiting for a down bar on your 5-1, that smaller, faster chart. Remember, everything that happens on the 13-2 in one bar may happen in 20 or 30 bars on the 5-1. This reversal signals the beginning of a pullback. So you're going to create your window of opportunity, and your window of opportunity is going to be from the highest point of support, that mid-band, to the lowest point of support, those 1-to-1s. And guys, here's the key to this one. Inside of favorable large triggers. Why do we do that? Well, because large triggers are a moving average. Guys, this is kind of a technical thing, and I'm not a very technical guy. But what I do know from studying the market for 2 years is that price typically returns to the large triggers, especially when it accelerates away. So when price returns to those large triggers and I have areas inside of them, I'm taking a trade. I'm going to right click at the top of that window because I have so much momentum, and I'm going to activate my limit order, and I'm going to wait. And either the market's going to come to me or it's not. And if it does, I'm long. I'm in a long trade. And guys, I have the advantage of odds favorable momentum. I have the advantage of no termination conditions, that clear path. And I have the advantage of entering the market at the area where it is likely to continue. Remember, it's a window from the highest point of support to the lowest point of support. So my initial stop is going to go below that window. It's typically 12 to 14 ticks. Below that window of opportunity where the market shouldn't go. And I use that phrase where the market shouldn't go because if the market pulls all the way down here, I'm no longer at the area where it's likely to continue. My advantage has gone away. I no longer want to be in the trade. But when I follow these rules, I have these advantages. I take this trade from the best spot. 70 to 80% of the time, this is my result. Profit target reached. Because I waited for the pullback to the best area, my initial risk is reduced below this reversal bar in the direction of my trade. I've minimized risk. And because I'm in from that low point, I've maximized my profit potential. Guys, this is your entry on the 5-1 chart. So let's take a picture and let's put them together. When the rules are met on the 13-2, and guys, this is how you study. This is your study trick. I'm going to get rid of the 5-1. I don't care about that one until my rules are met. If I'm scrolling back on my 13-2, I'm looking to study these high probability trend trades. Remember when we talked about odds favorable momentum, we saw those tails with the circles and said these are potential entries. Guys, you can scroll back 10 days, 20 days, 30 days. You can market replay from 10 years ago, and you're going to get this same scenario. When I have odds favorable momentum, meaning that the small triggers are above the large triggers, there's space between the two, the odds are favorable for the market to continue up. When I haven't reached that key area yet, no termination conditions, if I see one of these tails, I'm going to circle it. And then if that tail, that circle, lines up with an area of support inside of favorable large triggers, guys, this is my best of the best trade. This is my high probability trend trade. And I want you to recognize at the time of entry, my small triggers are outside of the large triggers. I have odds favorable momentum on the 5-1 as well. I have no divergence, no negative number on my 5-1 pivot. Every advantage, this is your best of the best. When we talk about the entries on a 50-50 trade, guys, this is it. The large triggers have not completely broken through an area. Because they haven't completely cleared that area, I want no divergence. I want strong triggers. And remember, when those trigger lines are trending one on top of the other, it gives me a tiny little window of opportunity. Every advantage. So guys, give me a why in the room. We're going to go through and just start studying a little bit. And that's exactly how we do it. Strong triggers, no termination conditions, pick your area, the advantage of momentum, a clear path, and where the market is likely to continue. This is your focus for 30 days. And what you're going to do is you're going to recognize over those 30 days how to read your indicators. This is the S&P today. Let's just for grins circle some tails. When the smalls are outside of the large, when things are going up, when there's no termination conditions, and it's rare, but look at this. How many opportunities? Don't even have to scroll, right? This first circle pulls right back to an area of resistance inside of favorable large triggers. Well, large triggers are a little wonky. No divergence. Pulls back to the mid-band and a little bit beyond, doesn't it? Initial tick, initial stop of 12 to 14 ticks until you get the reversal bar, keeps you safe in this instance. That's a pretty good runner. If we scroll back, go in the other direction, not the ideal look, but price pulls right back to the area of support inside of favorable large triggers. If you go a little bit lower, it doesn't quite make it. Sometimes it's your trade, and sometimes it's not your trade. You have to go through and do the study and determine whether or not your rules were met. If your rules are met by doing the study, by recognizing the advantages, you're going to feel comfortable taking the trade. Right now in the moment, smalls have broken through these 1-to-1s, but the large have not. 50-50 trade, half are through, half are not. In order to take a 50-50 trade, I want things to be perfect, right? Well, 2 divergences, and look how that market pushed beyond the window of opportunity. We've lost the advantage of a clear path, we've lost the advantage of momentum, and it doesn't quite work out the way most people would hope that it would. If we come over to crude oil, and we start to look, let's see what happened back here. Odds favorable momentum, no termination conditions. Guys, are you with me on this one? Is anyone going to show me pictures of these today? How did they look? Let's scroll back. Well, that's not a great looking entry. That's an area below, not the best of the best. Here's a pullback directly to support, right at those large triggers. And it looks like we had one more right here. Looking for the best of the best, giving yourself an advantage. Right now we're trading into resistance. Absolutely no trigger lines through. Can't go long, not until the area breaks. So guys, there's a couple things that I've done for you. I've created a high probability trend trade checklist. This has the rules and then pictures of each rule being met. I'm going to close that out, and I'm going to put that in the room for you. Save it. Use it. I've also created a more condensed version. Awesome, Gary. High probability trend trade. It's got 4 sets of rules on there. Guys, this is for you to print out, to put on your desktop, so that you can check yourself and police yourself each and every trade that you take to make sure that the rules are met. Guys, look at that, 50-50 on a termination condition, a cyan divergence line, divergence prints, and the market pushes lower. Pretty cool. Patterns each and every day. And guys, the final thing I'm going to give you is an example how to write your plan. And this is going to be the most important thing that you do as a new trader. To commit 100% to a set of rules that tells you it's time to pull the trigger. And this is an example of how to write your plan. Guys, this is not me writing your plan for you. Although, wink, wink, nudge, nudge, there's an awful lot of new traders that adopt this as their own to make sure that they're consistent for that first 30 days. But understand that as your ability to read indicators grows, so will your trading plan. As your ability to read your charts grows, so will your management plan. This is your foundation, your good start, and you're only focused on your entries. you're going to use the phrase, my trade is, to define your entry point. And that's all we're defining, guys. For 30 days, your only concern should be getting in at the correct spot, period. You're not worried about your P&L. You're not worried about win-lose ratios. All you're worried about is practicing the best of the best entries until you're on autopilot. You're so comfortable with it. And in order to enter the trade, I must have the conditions of the checklist met. And guys, there's your checklist, that high probability trend trade checklist that I just put in the room. Once you identify what it's going to take to get you into a trade, guys, put a couple pictures of high probability trend trades in there. Make sure that you know exactly what those conditions are going to look like. If you need a first picture to steal, I'll tell you what, go to the entries. Scroll down a little bit. Take a picture of this picture and say, man, this is my best look. Right from the manual, this is what I'm going to commit to. And the cool thing is you can take this picture and you can upload it to Screencast, which means that it's going to send itself to the cloud. And you can open up your spreadsheet, guys. And you can put that picture right in your personal trade setups. If you're brand new, your spreadsheet is in your Nexgen Study Picks folder. If you're not brand new and you're ready to be consistent, you're ready to commit to that best of the best, follow this link to the spreadsheet, guys. And if I'm not mistaken, John Novak has updated it. A section for your personal trade looks. Every time you take that high probability trend trade, put a picture in here. And then guys, this is stolen directly from my spreadsheet. John did that this weekend. High probability trend trades by clients. There are 69 pictures of high probability trend trades for you to study. There's HVA, your second trade, management things, chart reading things, termination conditions. Guys, all of this is available to you on the spreadsheet, but your job is to have your spreadsheet, to fill your spreadsheet, to take those best of the best pictures and put a couple in your plan so you know exactly what you're looking for each and every time you pull the trigger. And then as your plan grows, as you begin to look for that medium probability trade, that first medium probability trade, that 50-50 trade, you need to put it into your plan on 50-50 trades. I say that no divergence will be present on the 5-1. You may have a different opinion. I say that my small trigger lines must be outside of the large on the 5-1 for an entry. Again, yours may be different. This is an example of how to write a plan, not the gospel truth. But guys, I've defined my entry and I'm going to spend 30 days doing nothing but focusing on that best of the best entry. That's only half of it, right? Getting into the market at the right spot is so important. But what are you going to do once you're in? How are you going to react? Do you have a management plan? Guys, this is going to take you longer to build than finding that best entry. If you focus on the best of the best, you're going to be nailing entries in the first week. No doubt in my mind. Someone correct me if I'm wrong. If you follow the checklist, you will nail entries in your first week and you'll get really good and really comfortable with it. But now we have to manage it. In the beginning, if you keep it very methodical, very mechanical, you take your emotions out of it, because you're learning to read charts, how could you possibly be prepared to manage if you're just learning to read charts? Keep it mechanical. This is the most mechanical approach I know how to do, guys. I will trade 2 contracts. It's not, I think I'll trade 2 contracts. I hope to trade 2 contracts. I might trade 2 contracts. It is definitive. I will trade 2 contracts, period. And my initial stop will be 12 ticks. And I will adjust above or below the window of opportunity initially. Guys, 100% from the manual. I will adjust above or below the window of opportunity. When the trade goes in the direction, I'll move my stop 2 ticks below the reversal bar. Guys, this is a mechanical adjustment. Your first stop movement is 100% pragmatic from the rules, no emotion, no hope, no fear. Just do it. Your second stop move, 100% mechanical, no hope, no fear, no opinion. 2 ticks below the reversal bar. That's it. And then it says, I will take profits on my first contract at $100 and move my stop to break even manually. My second target will be $200. This is the most mechanical approach that I know to trading the market. Guys, so much so that Friday in class, we created this management plan in pictures. I'm going to put them in the room for you. If you weren't here on Friday, guys, this is your first picture. When I enter the market, my stop will be where the market shouldn't go. My profit targets are established. There's nothing for me to do. That's it. I'm in, I'm good. Move 2 ticks above or below the reversal bar in the direction of my trade. Guys, these should be in your spreadsheet. They're in mine. When the reversal bar is given, here's my new stop. 2 ticks above the reversal bar. And then the note, nothing to do now. I'm either stopped out of the trade or my first target gets hit. Because remember, our only goal for the first 30 days are these perfect entries. And we definitely had the perfect entry. What's the third part of our management? I will take profits on the first contract at $100 and move my stop to break even. Guys, price reaches the first target hit. Stop is moved to break even. That's it. It's mechanical. There's no opinion. It doesn't matter what's going on. And then here's the part that's hard for guys to accept, for gals to accept. I will not move my stop again. Either my second target is hit or I'm stopped out break even. That's it. That's the only option in the beginning. And then the final picture, 70 to 80% of the time, my profit target is hit. I'm out of the trade for a $300 winner. My management was mechanical. It was methodical. It didn't leave any room for emotion. It simply is what it is. And then the great news for those of you that don't just want to make $300 3 or 4 times a day is every time you take the perfect trade, you're developing a management plan. Every time you take a perfect trade and you take these profits, you're going to begin to recognize through your pictures, this is a good one. Here's a trade, high probability trend trade, quick targets reached, and my trigger lines said let the last one run. Notice how I didn't say I hope it goes, I want it to go, I need it to go. My strong trigger lines with no termination conditions said to hold that trade till the next area. That's how management plans are built. And guys, when I use this management plan, I'm going to show you one more, then we're going to take a little break and then we'll come back and get to everybody's pictures, start looking at stuff. I want to show you the difference between mechanical and then learning to read your indicators. Let me figure out where that picture went. I reset my simulator at one point because I was showing some examples in class. Where on earth? Guys, I lose pictures. I take so many pictures. I take more pictures than the average bear. There's a reason I can read my charts the way I do. There's a reason I understand what my indicators are telling me. Here we go. This was 5 days with mechanical stops and targets. Can you guys see this? And this isn't a brag. This is why you stay focused. Checklist trades only. I had to be able to get in based on the checklist. Over 5 days, $1,500, 80% winners, is about 20 trades. Last week, I began letting my indicators dictate stops. And this was the first 2 days before I accidentally reset because I was showing someone how to move stops and targets on Sim. $1,512, $10 difference, literally, in 2 days. 9 trades, almost 90% winners. Same checklist trades. The only difference was one had a management plan in place that relied on the indicators to tell me when it was time to get out of a trade. The other one was $100, $200 trades over and over. Guys, this is the difference. They both relied on the exact same entries. It was just allowing the trades to do what the trades are going to do. We're going to talk about that every day in here. Your job as a brand new user is to post pictures of everything to do. Your job as a brand new user is to ask for feedback anytime you take a trade, anytime you're working on management, anytime you have a question about anything you see in the market. And the more questions you ask, the more opportunities you take to use the resources. 15 hours a week, I'm here to answer your questions. The sooner you're going to get where you want to be. So guys, that's the first hour. We've talked about our rules. If you've taken a trade today, post it in the room. If you haven't taken a trade today, take a picture of your charts. Tell me what you see. Maybe you see a termination condition that created a big bounce all the way back to the large triggers. Maybe you see resistance that hasn't broken. Maybe you see multiple divergences. Maybe you see that we're coming from a 1-to-1 that created a full reversal with odds favorable momentum. Take a picture. Talk about it. Annotate it. Let me know what you see. I'll be back soon, guys, and we will start the second hour. All right, y'all, let's get moving into that second hour. So, price reaches an area of resistance. Absolutely none of the trigger lines have broken through. We are looking at a termination condition currently on the S&P, which means that even with odds favorable momentum, we are not looking for long trades if you are a 100% rules-based trader. Crude oil has broken through that area of resistance and just grinding its way up, looking to get to that next area. Not a lot to do here either, guys. So let's kick back. I'm going to scroll back, see what you guys have been doing this morning. See if we have any trades that you guys have shared with us. I believe that you have. Let's do this first, though. Let's look at the pictures John Novak put in the room first thing this morning. For those of you that haven't been around too terribly long, John Novak studies patterns every day. That's all he does. He market replays on the weekends, and he studies patterns. He market replays during the week, and he studies patterns. He watches multiple markets, multiple time frames, and he studies patterns. So he takes pictures like this. This is everything that we talked about. This is a 13-2. Strong triggers, no termination conditions, trigger lines crossed up. Buy the market when the low is lower than the previous bar's low. What is this? This is your pullback to an area of support inside of favorable large triggers. Here's the same picture showing you the perfect conditions, showing you where that pullback is. And you're going to use the 5-1 to know where that tail is most likely to form. Same thing on this picture. Looking for the opportunities until resistance is reached. When resistance is reached, you stop looking, wait for odds favorable momentum, and you're going to look for those entries on your 5-1. And that's exactly what you're going to do every day until you're so good at this that you just can't help yourself. Every time you take a picture, post it in the room. Let's get some feedback. Michael, you posted today. Let's see what you have. You have a weak top, but you do have strong triggers. Looking at that odds favorable momentum. Small triggers below the large triggers. The large triggers are wide. They're angled in the direction of the trend. You get a picture perfect pull back to an area of resistance inside of favorable large triggers. You take quick profits on the first. And then when it gets to that trouble spot, the triggers are in, you say, you know what, that's enough. I'm going to take my money, and whatever happens, happens. Michael, this is picture perfect. This is an absolutely beautiful high probability trend trade short because it is, and I want you guys to do this with me. Steal Michael's picture. This is one for your plan, guys. This is one to help you study. I'm going to take that picture. I'm going to put a link in my spreadsheet. I'm going to give Michael credit. Michael's perfect. High probability trend trade short. And now I'm going to be able to study that each and every day. Michael, that was perfect. Bobby T, let's see what you did. Bobby T asks, do I need to concern with this fib? It doesn't look like the one above. Yes, sir. Bobby T, are you with me in here? And Alyssa, I just saw your question. I'll get you. Let me find. I had a picture from John Novak. And Bobby T, I'm going to get it for you. John had a picture. What do the fibs mean? Let's see if it's in Discord real quick. I'm going to take a look because I really want to see. So fibs that don't extend into the gray come from other charts. Absolutely, you want to be aware. If they're there, you want to be aware. Fibs that extend all the way across are native to the chart you're looking at. But if you see a fib, be concerned with the fib. It's there for a reason. So Alyssa, what's the difference from a pullback to a tail and a reversal bar? Great question. Let's answer this question real quick. A pullback. Let's start with a pullback. When everything is going up on every chart and the underlying trend is up, a pullback is a small retracement counter to the underlying trend. So if everything says up, a pullback would be a small little run in price that's down. And I believe if you go to the glossary of common terms, a lot of common terms, huh? Retracement or pullback describes a small move in price counter to the underlying trend. And then what's a reversal bar? A reversal bar is when the market puts in a bar in the opposite direction. So if we go back to the entries, every bar is going up. Alyssa, your reversal bar is the first down bar after all of those up bars. And it's very much exactly like it sounds. It's a bar that shows a potential reversal. And then finally, when we talk about the tails, we'll come to this one. As these bars move up, when they get to a certain price, they become a new bar. If price pulls all the way down, and I'm going to show it to you on the live charts. Alyssa, hopefully you're with me. This is what's called a reversal bar marker right here. So after all of these up bars, if this bar pulls all the way down to this white bar, or this white reversal bar marker, I'll get a down bar. If it doesn't make it to that reversal bar marker, it means that it pulls down and then it heads back up. That's when we get these tails. That's when we get these wicks. And if you circle one of these wicks, you can see that that tail represents a pullback on the 5-1 chart. So you circle the tails on the 13-2 and then decide if they fit the rules for entry on the 5-1. Here's your tail. If you circle it, your limit order goes right above that area of support at the 5-1. But remember that the tails, Alyssa, and this is so important to remember. Of course, I have a picture for it, right? Strong trigger lines, no termination conditions, rules 1 and 2 are met. If I circle the tail, you can see that it's a pullback on the 5-1. And then here's your disclaimer. Alyssa, don't wait for the tail to form to take a trade. I had someone go, Mark, every time the tail forms, the market's so far away I can't enter it. Circling the tail is a way to study. It's a way to backtest, to go through, to develop recognition of the pattern. Don't wait for the tail to form to take the trade. It's long gone by then. This is an after-the-fact study tool to help visualize the best setups with the rules met. Does that make sense? Awesome. So if we're doing it and you want to study, let's find one that works out great. No, I think you're just going to start running circles if you do that. Use your 13-2, Alyssa, only to recognize odds favorable momentum and no termination conditions. So let me get rid of, where does that one come into play? Awesome. I'm going to find a quick example real quick, and let's just run through it. And I think that this is one of the drills that seem to be really helpful for my wife as she's learning entries. So hopefully, and guys, I'll tell you what, when you're teaching somebody to do it from day one in a private setting, you really get a pretty good grasp of what you're looking for and some of the common stumbling points that people have. So if you ever bump into Nexgen Jen somewhere, tell her thanks for being my guinea pig. All right, are you ready, Alyssa? Let's walk through it. You'll notice on the 13.2 there's no tails, right? But do you see, and guys, this is for everybody, not just Alyssa. Do you see odds favorable momentum? Smalls below the large are wide, they're angled in the direction of the trend. Everything says this market is likely to continue in the direction of the trend. You'll notice that price has not reached a key area. So what does this tell me? Rules 1 and 2 are met on the 13.2, right? So I look over to my 5.1 and I'm kind of looking, I'm like, all right, everything is down. I sure hope it doesn't go without me. But I'm just going to focus my attention. Where are my trigger lines? Here they are. One on top of the other looks great. Do I have any areas in that by those trigger lines? So what do we see? 1-to-1s and a midband, right? So Alyssa, what are we waiting for to activate our order? Market's trending down, a pullback. What signals the beginning of a pullback? Reversal bar, right? This reversal bar. I'm so glad you asked this question. You're going to walk away today with such a newfound clarity. When everything says down, we want a bar going up, right? This reversal bar signals the beginning of a pullback. So let's create our window of opportunity. From the lowest point of resistance inside of favorable large triggers to the highest point of resistance inside of favorable large triggers. Alyssa, this is like a 2-tick window. This is amazing. So where do we put our limit order? Where do you want your order, Alyssa? This is your trade. 71.40? Just below the window of opportunity? I love it. Picture perfect. So what's our only option now? It either gets us or it doesn't, right? Here it comes. What do you think about this? And I have to talk to people about this. See how your mid-band came down? It lowered that window a little bit. Don't ever trip over pennies to save dollars. I want to be at least a tick below that mid-band, maybe 2. I don't want to miss this trade. I have odds favorable. I have no termination conditions. I don't even have divergence, and I have strong triggers. This order can be moved, right? You use 2, Ed? 2 ticks? Boom. All right, Alyssa, you're in the trade, 71.39. You feel good about it? Where's your initial stop? If it's 12 ticks, it's right up here. So there's your stop. Cool. 10, you say? All right. It's outside of the window of opportunity. So are we going to stay mechanical on this one too? If we're in at 39, here at 29 is our first $100. Let's make it the color of money. What do you say we keep all the emotion out of this one? There's our second one at 19. Brighter, happier money. So how do we feel so far? Alyssa, you've identified your window of opportunity. You've identified your advantages. Your stop is where the market shouldn't go. And your targets are predetermined. Uh-oh, it's going against you, Alyssa. You're down $10. You're down $20. You still good or you want to bail? Oh my gosh, look, there it goes again. Whew. Oh, I don't know about you. I'm nervous. Because I don't trust my rules yet. I'm nervous. What's going to happen? Oh, it keeps going. Alyssa, what are you doing? How will the kids go to college? Another one? Scholarships. Good answer. Aren't we still in the window of opportunity? Aren't we still in the area where the market is likely to continue? Don't we still have the advantage of momentum and nothing in the way? I still like this trade. They're going to have to come get me. If they want me out of this trade, they're going to have to come get me. Ooh, they might be. We're at the top of that window. Boom. So Alyssa, there's your first reversal bar. If we're taking a very mechanical approach, your new stop is right here at 47. So you saved 2 ticks, right? So right now we're risking 39, 47, 8 ticks. As you're active in the trade, absolutely. Once this reversal bar happens, let's move our stop. Let's tighten it up. The market has told us that it wants to go back in the direction of the trend, back in the direction of the momentum, back in the direction where there's nothing in the way. Does that make sense? Just a great way to reduce risk a little bit. It's not even that it's strengthening protection. It is simply that the market is pulled back to where it's likely to continue, and this reversal bar says, well, it's continuing. So I'm just going to come behind it. It's done everything that I need it to do. And then there it goes. It starts to move. And it's still going, and now you're feeling great. And right about here, you're thinking, I sure hope it hits my target. Maybe I should move my target. Maybe I should raise it up. Anyone ever thought that mid-trade? Maybe I should put my stop right here. Maybe I should make sure that I don't lose. Keep it mechanical, guys, because your emotions are going to turn your stops into chum. Market's still going with the advantage of momentum. Still going with the advantage of nothing in the way. Still going with the advantage of having entered where the market is likely to continue. There's your first profit target, guys. So that's $100 in the bank, right? That's $100 in your account that they can't take out. The mechanical approach says go break even. So if I go break even, nothing bad can happen to me, right? I can't lose. That makes it easier for new users to hold on for that second target. There is absolutely nothing for a new user to do here other than either get stopped out break even and you only make $100, or it goes to the target. Coming down, uh-oh. You're out break even. And you made $100. Guys, this is your mechanical 100%, no room for any sort of emotion trade, right? $100 break even. If you do that 4 times a day, and that's all you get 4 times a day, that's a $2,000 month or week, guys. That's still not a bad week. This is how you learn to develop your plan. What do your 13-2 triggers say here? Are the odds favorable for the market to go down still? We're going to talk about the next level management. What do you think, Alyssa? With this much momentum and nothing in the way, would it be worth it to you to keep that $100 that you already made at risk for a bigger move? Does that make sense? You would get out, and that's totally cool. In the beginning, that's a great plan. But if you're saying I have so much momentum and nothing in the way and everything says down, the small triggers are still outside of the large, when it creates that second pivot, now I'm 2 ticks behind that pivot. I'm risking 3 ticks to get to my 200. Uh-oh. Now I have a pivot stop out. Now my triggers are inside. Maybe I have an exit condition. Maybe I'm going to hold. Nope. Oh, look at that. It didn't get me. Market goes sideways for a little bit. And there it is. But Alyssa, the whole idea was, let's go back to our entry. You determine where this tail is likely to happen by identifying the area of resistance inside of favorable large triggers. You have no idea where it was coming if you're just looking at your 13.2, right? I have zero idea. But through identifying the area of resistance inside of favorable large triggers, I know where it's likely to take place, which means that I know where I should be entering this market at the area likely to continue. Isn't that amazing? Guys, this is a pattern that repeats itself. Every market, every time frame, all the time. Your job for the first 30 days is to take it so many times, to take so many pictures, that you can't help but trust it. So let's take a picture. And let's do something clever. Let's put the checklist on it. How do I police myself? How do I make sure that I'm following my rules? Because the goal isn't to win huge in the beginning. The goal is to follow your rules, to take the same trade every time so it becomes muscle memory. Is the market coming from a good top or bottom? I don't know. I can't see. I'm going to put no. Do I have odds favorable momentum? I do. No termination conditions? Absolutely. Area for entry inside of favorable large triggers. Guys, you have a trade. Alyssa, you took a trade that wins 70 to 80% of the time. What does that mean? It means, let me find it. It means that there's going to be instances where you have strong triggers and no termination conditions and a perfect entry, and guys, you're not going to win. And I think that it's important that you guys understand that. Anything that wins 70% of the time is mathematically obligated to lose 30% of the time. Have you built the trust in your plan to take the next trade when it sets up? If this one loses, do you trust it enough to take it? Your rules give you an advantage. Your rules give you a win percentage higher than your loss percentage. It's an advantage every time. So this is the part, guys. Recognizing an entry isn't difficult. You'll do great at that in no time at all. Understanding that just because you followed your rules, it doesn't guarantee a win. Guys, we're not in control of what the market does. I still have this picture in my spreadsheet as a perfect high probability trend trade long because the rules were met 100%. Guys, I don't control the market. You know who does? There's my segue. I use this analogy a lot, guys. Sharks and remoras. Big money institutional traders, thousands of contracts, millions of dollars. These are the guys that create tops, bottoms, momentum, everything that we look for to have an advantage. It's created by somebody else. It's created by somebody who couldn't care less about your two contracts, doesn't even know you exist, doesn't care if you exist, doesn't think about you at Christmas, doesn't wonder how your day's going. You're just something that's there. Let these guys do all the hard work. Let them fight it out at key Fibonacci areas. Let them create the momentum. And we'll jump in with a well-established set of rules that lets us take advantage of all their hard work. Don't try to be a shark with your 2 contracts. You're going to end up shark food. Does that make sense? That's your trade, right? No matter what happens next, that's your entry. So let's see what the market's doing right now. Smalls above the large, larger wide, angled in the direction of the trend. Guys, does it make sense to activate a limit order just above an area of support inside of favorable large triggers? Give me a Y in the room if you see that the rules are met. Smalls above the large still, larger wide, they're angled in the direction of the trend. Guys, there is absolutely nothing in the way. There's my window of opportunity. Is it worth 10 ticks? Where's the market likely to go? That next key fib area. Is it worth it? Will you take this trade? Do you trust the rules? Whether it works or not, guys. Whether it works or not. And guys, yeah, there was a couple opportunities here too, right? To get up that far. I'm going to scroll through. I'm going to look at some more charts. If I miss your chart, if I ever miss a chart or a question, guys, just ask it again. NG time, you were watching. You asked this question, NG, last week. You have to develop a plan for it. Let's see what we have. Termination, termination. Smalls below the large, the 50-50 trade. Your 5-1 pulls back. You take it from the pullback to the triggers. I like it. If this termination condition is going to turn the market, it's a good one. NG, you are not in at an area inside of favorable large triggers, though. You're in well above. A high probability trend trade entry would have been here. You did get in higher, which is kind of nice. You waited for that white bar to go in, I think. If this area, which hasn't broken, has the potential to break with the momentum, with the termination condition, if it's going to go, you've got a good spot. I'm not sure how that one ended up. AK, odds favorable, beautiful pullback, easy money. Nice job. Nice trade. Guys, did that little entry, did that help a little bit? That bar by bar? You know you can do that all day long, right? Gary, on crude oil, you have smalls above the large. You've cleared your termination conditions. You took a pullback to the area inside of favorable large triggers. And it looks like you made money right until a third divergence printed. Gary, great entry. Nice job reading your smaller chart, recognizing a change in momentum. Exiting. Let's make a little money and wait for the next best, right? I love it. Nexgen Ben saying, see, I don't just post winners. Here's a before and after of a shot of a 50-50 losers. Your rules were met. Rinse and repeat. Wait for the next setup. That's it, right? 50-50, no divergence, perfect entry. What's the after look like? They gotcha. Not a high probability trade. Sometimes even with every advantage except the large triggers being through, it's still not enough to ensure success. Nexgen Ben, I know you have a super solid plan. Can I show you one thing that I see here that I hate on 50-50s? Split triggers. Absolutely hate it. On a 50-50 trade, this is my least favorite look in the world, because is it going to pull back to this trigger line or is it going to pull back to this trigger line? Look what happened at the top trigger line. Just throwing that out there. This is one of the observations. I've taken this trade exactly like you, probably 50 times, and it took me 30 losses to go, dang it, those split triggers on a 50-50 definitely take away. And that's what kind of led me to when I talk about the perfect entry. And Ben, you've got a plan, man, and your plan is solid. I know it is. So I'm not trying to micromanage you in any way. That small window of opportunity is my absolute favorite on a 50-50. Making sure that these are one on top of the other super strong. So just an observation. I'm still learning patterns every day. So I assume that sometimes people see it, sometimes people don't. Ron, my heart can't handle you today. Just kidding, Ron. Nice trade. 100% by your plan. It looks like you got in a little late on this one per your plan, didn't you? You out getting coffee? Usually I see you in right as it breaks that key area over here. A little bit, had to go potty. It happens. Everybody potties. Still a nice trade, 100% by your plan. Isn't that funny, though? You have an unorthodox way of trading. It's not the high probability trend trade that I teach day in and day out. But now I can look at your charts and go, hey, Ron, you're in a little late for you. Guys, everybody has patterns that they repeat. Whether it's the patterns of their trade plan, whether it's their patterns of breaking rules, everybody has patterns that they repeat. One of the things that I'm pretty good at, guys, is recognizing patterns. So the more you post in this room, the more I'm going to recognize patterns in you, the more I'm going to be able to point those out to you and help you get to where you want to be. Guys, when you look at the spreadsheet, the termination condition section used to be called the Mark Novak section because I would trade into every termination condition I found. It's just what I did. I don't know why. And I never recognized it. I just thought that the market was hateful and taking my money. And then I finally got the courage up to post in the room. And guys, if you think you get nervous posting in the room, try having your last name Novak. Holy smokes. When John Novak is teaching the room, guys, I got to the point where I got so sick of losing, I humbled myself and I put everything I did into this classroom when John taught it. And my learning curve just went off the charts. It was amazing. I recognized patterns, and more importantly, my brother recognized patterns in me that were keeping me from my goals. George, let's see what you've got, bud. There's a 21. 21 says up, but a lot of space back to the large triggers. 13.2. Odds favorable, a little bit of overrun. No divergence, nice entry, quick profits. And then your target is where the market is likely to go, just above that pivot stop out. George T, nice trade. Maybe just a skosh early on the entry, but you wanted to make sure that you got it. I like it. And guys, here's something cool that I noticed, and I don't know if you guys noticed this. This is the entry, right? What a great entry. If I look left, this resistance inside of favorable large triggers with odds favorable momentum and no divergence lines up with this area of resistance on my higher time frame chart that I anticipate holding because of odds favorable momentum. And wait for it. It also lines up with an area of resistance that the large triggers are below with strong small triggers on a 21 chart. And it lines up with an area of resistance on my 8 range. So guys, when we talk about advantages, Nexgen Ben, I'm going to give you props for a second. Nexgen Ben used to say, wait till it's obvious. Wait till it's obvious, then take your trade. So guys, tell me, strong triggers, everything down, resistance. Strong triggers, everything down, resistance. Strong small triggers, large below resistance, resistance. Odds favorable, resistance. even a market flow signal for good measure. Every chart agrees. Every background color is the same. Trigger line colors are the same. Resistance is the same. George, I would have never moved a stop. You couldn't have paid me money to move a stop until that first target was hit and it was well on its way. What a beautiful trade and what amazing recognition. I'm going to take this picture. You know what I'm going to call it? Where's my spreadsheet? I'm going to go to chart reading things. Guys, that's a great picture. Maybe you should steal it too. Let me put the link in the room for you. I'm going to call this one Nexgen Ben says it's obvious. There we go. And guys, I'm going to tell you, one of my absolutely most hated words in day trading and teaching someone to day trade is obvious. Because nothing is obvious until you've put in the time. Nothing is obvious until you put in the reps. Nothing is obvious until you ask the questions. So I try to teach class without ever saying that a look is obvious, because it used to frustrate the ever-loving crud out of me because it wasn't obvious to me. I hadn't put in the time or the study. Gary, nice trade. We saw that one just a minute ago. You said that's your last one till noon? Oh, this one. Last one. Join Top Step. I thought you were doing Elite. Guys, that's a good deal though. 30% off. What is Top Step? For those of you that think it's time to go live, but you're worried about money, well, if you're worried about money, you probably shouldn't go live. But for those of you that are looking to take that live approach, that real world pressure, places like Top Step, like Elite, they have combines. And if you pass their combine, and it's a combination of money management, asset protection, they'll fund you. You couldn't get it to run? Gary, I know exactly why you couldn't, because I signed up for their free trial. I wanted to give it a look. When you take the Elite Trading, you have to download their software to get it on there, and then everything runs smooth. I couldn't get it to run either. I didn't read the instructions. Fortunately, John Novak did. He got me set up. I was like, man, I couldn't get it to connect. And it turns out that you have to be able to run their software. And I don't remember what their software is called, but they have something. My recenter out of there. The Rhythmic Trader Pro, yeah, is what you have to do. Ed S., you said you only had 20 minutes before your meeting. You wanted the pivot stop out on the 13.2. Once it broke, you knew it was going down. No pivot stop outs on the 13.2 here. Here you just have odds favorable. Pull back to resistance. You tried to go long. You went short, and then you tried to go long. I'm not sure why. Maybe that was an accident. And then you jump in on the other side of the 1-to-1. You make money on the way down. Ed, eliminate going long when everything is red. And it's going to make your life so much easier. Just, if everything's red, if there's strong triggers against you, trade with the triggers. Have you guys read this book yet? How to Commit Financial Suicide, One Easy Step by John Novak. It's not really bathroom reading if you sit there for any amount of time. It's one page. Everything else is blank. Chapter 1, warning signs your friends are in trouble. They're trading against strong triggers. Chapter 2, they trade into termination conditions. Guys, this was made as a joke a long time ago. Because these are two of the biggest problems that new users have, because they want to be in every move and not the best moves. Trying to go long right here, absolutely no reason. Short, everything goes that way. Looks like you went short, made money, everything said down. Went short, made a little money, everything said down. Went long, gave up some of that money you made, and said, oh, hold it, that should have been short. Went short, made money. Even a less than high probability trend trade approach, if you're trading with direction, with momentum, clearing areas, good stuff. Good stuff. What's going on in the live market? Did it ever come back? It did come back to the mid-band, didn't it? It took it a minute. Thanks for that, Nexgen, Ben. I decided to do their free trial. They've got a free trial, guys. You go through, they give you the $250,000 combine. I've been on Sim for the last couple weeks testing these silly conservative rules. And I can't seem to not make money when I follow the rules. That's my personal experience, is when I follow the rules, when my checklist is met, I tend to win a lot more than I lose. So I thought, you know what? I'm going to do their free trial. It's the simulator version of a funding of an account. Alyssa, do you see how we could identify where that tail was likely to happen? We did that and went off to a different chart. A little bit below, but right there. Which one is what, Jose? The elite traders. It's a funding. I'll share it. I'm not, guys, and I'm not advocating you do this. I'm just saying that this is an option for traders that want to get funded. If you want to be live and you just want to make sure, that's a good way to do it, because most people on simulator will break the rules because it's just simulator, right? Have you done that? Well, I'll go ahead and take this low probability trade because I'm on simulator. Yeah, they are, Elvis. So guys, the way I look at it is if I do an elite, if I do top step, whatever, I get funded, I make money. Isn't it just doing this? It's validating that my plan is solid, right? It's validating that I can follow rules. It's validating that I won't blow out. It's validating that I can stick to a plan. Guys, I see these funding programs like personal trainers. Your job is to not need them anymore. And if you're making money consistently, there's going to be a point where you don't want to give them 10 or 20%. Either way, guys, what you do is totally up to you. It's totally up to you. I like that you guys are thinking about it, but where does it start, guys? It starts with having a plan. It starts with being consistent. This is how we're going to end the first hour, guys, and then the last hour. We already finished the first hour. We're going to finish the second hour with this. Then the last hour belongs to you guys, whatever you want to talk about. Step-by-step path to becoming a confident trader ASAP. Post your trades in class. Guys, there's 47 people in this room. 47 people in this room. I've seen charts from 3 of you. Oh, Nexgen Cameron's in here. So 46 people in this room. I've seen charts from 3 of you. Which means that there's really only 1 or 2 options, right? You're in timeout, Bobby T. How come? Show me why. It means that you're taking trades and you're not following rules. Bobby, when you break your rules, show me the chart annotated saying that you broke your rules. Do you know why? Watch this. Let me show you something. If I go long right here, and I get stopped out right here, here's the average response. Guys, and I want you guys to believe in this. And I see this a lot. I see ugh. I've seen, we'll call it darn. Heck fire. Market hates me. This sucks. I suck. Why is it so hard? And I see all these things, guys. If you write what's on your brain when you take this trade, and you're very, very honest with yourself, it's going to become very, very telling. What if I do this? What if instead of all that negative talk, I put my rules on the chart? Is the market coming from a good top or bottom for a long trade? It's not. Do I have odds favorable momentum? I don't. No termination conditions? That's not true. But I had an area inside of favorable large triggers. What does this tell me, guys? It tells me that I'm not following rules. I'm trading hope. It tells me that I'm willing to skip 1 and 2 for the sake of rule 3. Guys, if you post your losers in the room, we will have a conversation. And I'm telling you, I'm a nice guy. I'm not going to beat you up. But if you write down, and here's the best part, if you take the time to write, I didn't follow rules 1 and 2, the term and no momentum was why I was stopped out. Probably, because we don't know why. We don't control anything. And you write, need to follow rules. What are you doing? Well, you're validating your rules, right? You're telling yourself, not just in your head, oh, this sucks, I can't believe I lost. You're saying, I didn't follow my rules. I didn't take the best of the best. I didn't wait for the advantages, and it kicked my ass, pardon my French. And then you type out on your chart exactly why. What rules didn't you follow? What's going on? And then, guys, the hardest thing in the world is to take that picture, put it in the room, and get some feedback, and let's talk about it, and let's create a lesson, and let's reaffirm your belief in the rules and what's going on. So John Horde, you said you were chopped to pieces. I don't believe you. Show me a picture. Here we go. See how that works? John's on board. Look at all that. Trying to go up. So odds favorable, right? Everything says up. No termination conditions. I like it. John, your first entry is jumping in. Your second entry, jumping in. So here's your mid band right here. John, what if you kept it at 2 ticks with all that momentum? You would have stayed in all the way up. Divergences, pivot stop outs, no strength, no areas inside. Your 13.2 said it was going up, John. I'm glad to see that you had nothing but longs in here. Now let's do this part. We know that you had rules 1 and 2 met. I'm looking for an entry at an area inside of favorable large triggers. John, how many do I see? That's how many instances of rule number 3 were met. I know why you did. I know exactly why you did what you did. Because the 13.2 said it was going up, right? Your smaller, faster chart didn't help you. Yeah, it's just grinding up. So, John, what if, based on this conversation, you took just a second to focus on rule number 3? Then that may be the way. Did you notice that when you said you got chewed up? Did you notice that not one entry fit rule number 3? And man, John, that's a good look. That's such a good look on the 13.2. And this is why I think it's so important to post in class. And this is, guys, this was my saving grace. When I started trading, when I started learning Nexgen software, my brother told me that I needed to do 3 things. I needed to write a plan. I needed to take 1 billion pictures. And I needed to post in class. That was it. That's all he told me I needed to do. He said, if you do this, everything else is going to work itself out. Guys, I went 0 for 3 on that. I went 0 for 3. My brother wrote the software, created the plan. I thought because my last name was Novak and because I really wanted to succeed, that I would just somehow miraculously do it. And then it works. And then eventually you do it. And that's it. Sunday to review your trades like a highlight reel. I love it. Guys, there's another thing you can do. And this is something that John's recommended to people before. Is if you have Snagit, you can take a video and you can click capture and you can literally talk yourself through the trade. This is what I see. This is what I'm doing. Oh, hey guys, that's me. This is why I'm doing what I'm doing. This is where my stop goes. This is where my target is. These are the advantages that I had. These are the advantages that I gave up. And then guys, come back. Come back and watch it. I'm going to cancel that recording, get my ugly mug off of the screen. Guys, if you talk yourself through every trade on a video, you're going to be amazed at your willingness to break your rules. Or you're going to be amazed at your willingness to follow your rules. That you're holding yourself accountable. And until you're capable of holding yourself accountable, let me do it. Let me hold you accountable. I'll do it, and I'll do it with a smile. I'll be the nicest guy in the world telling you that you just screwed everything up. But it works. All right, guys. So S&P, we're stuck, right? Look at those. You replayed Friday's CL. It was worthless on Friday. My wife and I replayed Friday's S&P. It's horrible. I don't think there was one rule met. Guys, there's nothing to do on the S&P right now. They're sideways, into resistance, no momentum, termination conditions. What's crude doing? Smalls below the large, not coming from an area. Don't have odds favorable momentum. Whole lot of nothing going on, right? Do you have Snagit, John? Will Capture allow you to do it? I'm not sure if Capture will. Let's find out. Only Capture. It looks like The only thing capture will do is, let's see, if I do that, just for grins, if I want to capture a video, it looks like I can capture a video. It looks like it's recording. And let's see, we're just recording, we're looking, it's going. Oh, let me click record. So here we go. John, capture, go to video, click record. The market's trading at 73.89. It's trading, I don't have odds favorable momentum. I'm not coming from an area. It doesn't matter what I think. I don't have rules met. And then we stop it. And then let's see what it does. There you go, John. So you can take a video of every trade you do. From beginning to end, you could walk yourself through it and listen to yourself. Pretty cool, right? And then once you upload, copy it, maybe in your, I'll add a sheet and I'll name it Live Video Trades. And I'll make it prettier just because I have a little OCD, but for now, there we go. Isn't that pretty cool though? You can hear yourself. You'll be able to hear if you're nervous. You'll be able to hear if you're anxious. You'll be able to hear you clicking on that mouse, moving your screens 100 times, going like this. Oh, where's it going? I don't know. And if you have Snagit, you get to look at your face while you do it, which I don't know that that's such a big treat for me, but you guys may like it. Does that make sense? Give it a try. Oh, you want the trading session, John? I'm sorry, I just thought you meant your actual trade. No, watch this. Go to the Nexgen software services. We're live right now. We should be. Go to live. There's every one of them. Click on that one. Hey, look, there we are. Just on a little bit of a delay. So from the Nexgen page, go to live. Let me give you that link, John. You can go back and you can look at every class except one because I forgot to record one of them. You can't trade these past sessions. These are just videos of class. So what you want to use is Market Replay. Market Replay allows you to go back and retrade any day. So on the weekends, I typically Market Replay 3 days. So you tried it and you can't get it to work. Where does it stick for you? When I did it, this is how it worked for me. How many monitors do you have, John? I'm going to share what worked for me. Maybe it'll work for you. Okay, so you're cool then. So take this video and put it on one screen. And then on a second screen, pull up your control center. And John, it's going to walk you through. It's going to give you step one. When it gets to step one, pause it. Step one is you have to download replay data. You'll pick your instrument, the date that you want to replay. Let's say we're going to do Thursday, December 7th. I click OK, and I'm downloading replay data right here. Once this goes away, then I have the data for that day. And I can't get too far into this because it'll kill all my charts. But that's the first step. Once you download the replay data, you're going to disconnect from your live. It's saved on your computer. You're going to disconnect from your live and you're going to connect to the market replay. I don't think so. It's just kind of part of what it is. I don't have any troubles with it, but I've also got like a terabyte of memory on mine. Day trading is what I'm going to do for a living, so I made sure that my computer can handle it. But once you go through and you kind of work through it, John, it's pretty easy. If you get stuck, like one of the most common things is, I can't find a picture of it, 250 gigs of memory. Upgrade your memory. I don't know much about computers. Not going to lie, I wish I did, but I don't. I believe so, Michelle. When you delete, so 35 gigabytes of free, you've got 250. That should be enough. But this weekend, when the market was closed, I traded 3 different days. I traded Friday, which was ridiculous. I traded a day from the middle of October, which was just as ridiculous. And then I traded one other day that had a great flow to it and got some reps in, got to work on entries and management with my wife. It was a lot of fun. So John, give it a try again. You should be okay. Oh, there you go. Thank you, George. And John, there's a little easier instructions according to George. Boom, perfect. I love this community. Everybody taking care of everybody in here. And then if you try it this afternoon and it doesn't work out, let me know. Yours will act up if you don't pause the cloud. Guys, I think one of the biggest challenges that I had in the beginning is make sure your start date and end day are the same. If you try to make it roll through like 7 or 8 days, you don't get those dates lined up, it'll panic because it doesn't have it, and it'll make your computer seize up. And you will need to know how to build a chart. Fortunately, there's your settings. How to do it. We try to be really thorough here at Nexgen. And then the cool thing is if you get to a sticking point, that's where you just ask, hey, Mark, I got this far and then things seized up. I don't know if I've said this before, guys, but I've broken everything. Like, I have literally messed up anything and everything that can be messed up. I'm probably going to have a good idea of how to help you out. Guys, the S&P broke out of that range, didn't it? Came through, didn't give an opportunity. Now we have a 50-50 with divergence. I have small triggers above the large triggers, but my large triggers are halfway through. I have an area with the potential to break, but it's not broken. I have a loss of momentum on my 5-1. I have a window of opportunity that's about 2 points wide. This is a trade that you'll have to determine if it's your trade or not. I don't have an opinion one way or the other unless it's my money, in which case I say no divergence. But that's just me. A lot of you guys take these trades and manage them wonderfully. Let's see what happens. I'm going to take a few minutes and refill my water. I'll be back this way in a minute, guys. When I get back, last hour belongs to you. If you have any questions, let me know. John, if you'll remind me, the last 10 minutes of class or so, I'll shut down my live charts and we'll go 100% through and get market replay up, if that would be helpful. You guys let me know if you want to do that. I'm more than happy to. I've got a tea time this afternoon. I'm not trading after class. So I will be back in just a few minutes, guys. All right, guys, home stretch. Here we go. How we looking on that 50-50 with divergence? Still wondering, right? It might retrace to the mid-band. It might not. It might drop all the way down to 0. Who knows, right? I don't know, Ben. All I know is that my rules aren't met. That's it. Guys, it's liberating. Rules met, rules not met. Hey, Tim, nice to see you in here. I mean, it is what it is. It may run up, too. I don't know. I never know, guys. It is one of... What do you mean? When it's obvious? Nexgen Ben says it's obvious. Everything agrees. Ben, you are forever immortalized in my spreadsheet. It's just amazing, guys. There's something that happens when you say either my rules are met or they're not. Odds favorable, small below the large, no termination conditions. That's not a trade, is it? What about this one? Oh my gosh, that one looks pretty good. This is it, right? All I can do is wait. What tears up new users? What's the biggest challenge? Guys, I'm going to share my biggest challenge with you. Whoops, I didn't mean to do a video. Stop that. I don't know how to stop it. There we go. Get that off of there. My biggest challenge as a brand new user, guys, I want to share this with you, is I would try to go short here because I thought it was going down. I would try to go short here because I thought it was going down. I would try to go long here because I thought the mid-band was supposed to bounce. And because I took all of these trades, I missed this one. Money management became problematic for me too, Elvis, because I managed based on emotion. I managed based on I just lost, so I need to make more. I just lost, so I'm going to double the contracts. That short didn't work, and I really wanted it to, so I took it again and again and again. This long didn't work, so I kept going long all the way down because, dang it, eventually I have to be right. I don't mind sharing with you guys. I'm as human as the rest of you. I teach the class. I can read my indicators, but I had to battle all those demons, the same demons you guys fight every day. When it's obvious, it's easy. And it doesn't become obvious until you put the study in to make it obvious. Firmly believe that. Guys, what do you want to talk about? Crude oil's at a termination condition. No more short trades, right? You've lost the advantage of a clear path. If you waited patiently for the entry on a 50-50 at the mid-band rather than jumping in, you probably got in around 86.50. Maybe you took profits at 88.50. You're break even. If this market decides to continue up, you're in a good spot. If your rules say don't take a 50-50 with divergence, you're just like, not my trade. My rules weren't met. I don't care what happens. There's always going to be more mindset versus caution of what can happen. I'm not sure what that means, Elvis. If I take this picture, set some big font. I'm either going to say my rules say no trade with divergence on a 50-50, or my rules say take at the midband and manage assertively. That's it. Yeah, absolutely, Elvis. I agree with you 100%. Watching ticks instead of the overall. So guys, when you take this picture, there's two options, right? Either your rules say take it at the midband and manage it assertively, or your rules say no trades with divergence. Either one is fine. Neither is a bad idea. Neither of them is. Both are perfectly acceptable. But the thing is you either have to stick to this one or you have to stick to this one until you've done the work to adjust your plan. Does that make sense? It's either rules met or rules not. Just because this is my rule right now doesn't mean that it won't be. I might wait for a market flow signal. I might say when the large triggers are 50% through, I might say coming from a good bottom. But initially, my only thing is either my rules met or they weren't. Andy says he took the entry at the midband. Andy says with this kind of momentum on a 50-50 with the small so far outside of the large, he'll take that perfect entry at a small window with a little bit of risk and he'll manage assertively. Andy, great trade. Absolutely beautiful trade. This is perfect management on a 50-50 with divergence. You take $100, that's yours. They can't take that away. And you're like, I don't care if it breaks. I'm just going to take money right going up to it. Andy, I love everything about this trade. Guys, this is Andy's trade. Solid. Still into a termination condition, right? 3 divergences in the same location. Give me a Y or an N in the room, guys. Does that mean that the market won't go down anymore? Termination condition on the 13.2 and 3 divergences on the 5.1. Does that mean the market won't go down anymore? John Horde, exactly. That thing may tank. It may pull a full-blown Titanic and just sink, right? But we've given away the advantage of a clear path. Are you willing to risk your money without a clear path? Elvis, I like that. I like that. You know, somebody I was working with began embracing the phrase, not my trade. Not my trade, not my trade, not my trade. And they didn't know why it wasn't their trade. They just knew that if they said not my trade, they didn't have to get in the market and potentially take a loser. It is, Gary. That's what they knew for sure, is that not my trade meant that if they didn't get into the market, they had no potential losing money. So be careful when you use the phrase not my trade. It needs to be not your trade because, you ready? Wait for it. Because you have a very clearly written out plan that says what your trade is. And if it's not your trade today, it doesn't mean that it won't be tomorrow. Elvis, exactly. Has anyone ever done that? Maybe you were in this short and you said to yourself, you decided that that was your target. And you're in this short and you get a second divergence. You say, but my target isn't reached. I need to go to 73.40. And then you get a third divergence and you say, my target isn't reached. I need to get to 73.40. And then you get a trend change, and then you get everything changing, and you get stopped out for break even after you were up $300 per contract because you stopped reading your indicators and you started trading hope. You started trading something other than a plan. Guys, I've done it. I've done it more than I care to admit. And you have to do it. You have to make those mistakes in the beginning. You have to. You have to take the wrong entries. You have to hold longer than you should. You have to get out before you should. And then you share it in class and we have a conversation about it every day, guys, until everything becomes comfortable. Yep, or you become so focused on the target. Have you guys heard that joke? This is that joke exactly. So the guy is on his roof and the water level's rising. And guys, this isn't a religious thing. It's just a funny joke. So please don't read into it. And he says, "Oh, Lord, help me. Help me. I don't want to drown." And then a guy in a boat shows up. And he says, "Get out. Get off that roof. Come on. I'll save you." And the guy says, "No, not going to do it. The Lord's going to save me." Then a guy in a helicopter, when he's on the rooftop, and he says, "Get in the helicopter. I can save your life." And the guy says, "No, God will provide." And then the guy dies somewhere here, and he gets to heaven, and he goes, "Lord, I put all my faith in you. Why didn't you save me?" And God looks at him and says, "You big dummy, I sent you a boat and a helicopter." Don't get so focused on the wrong thing that you don't pay attention to what's happening right in front of your eyes. So I love that joke. It makes me laugh every time because I identify with it very much. That was very much my trading approach for a while, as I had so much faith that I lost sight of all the advantages or the disadvantages. I had so much hope. Guys, you have 3 divergences on your 13.2 right now. You've got large triggers down, but you have small triggers above it. Shouldn't be any more longs if you're following rules. Isn't that a good one, though? And guys, it has nothing to do. Everybody wants to make stuff into what it isn't. It has nothing to do with your faith or really even with God. It's just it's a great parable that reminds us to pay attention to what's going around. Don't be so one-sided that you're not open to what's going on. All right, there's that 50-50 with divergence, right? It started pushing back up, started losing momentum, get a second divergence. There's your trouble spot. That was your management opportunity if you decided to take that trade, right? If you took the 50-50, that was your small chart telling you, don't lose money on this trade. Don't hope that it goes to that next level. Times they are a-changing. You know, it's funny, and I reference this a lot. I hope that I don't bore you guys by saying my wife, my wife, my wife. So while we're teaching her, it's pretty amazing because when we're doing market replay, we talk just like you and I talk in this classroom. What do I see? This is what's going on. And I'll pause market replay. And guys, this is your opportunity as a trader to build awareness, to just take that picture and don't focus on the main market anymore. Don't look at the live market. And draw arrows to 3 things. I don't care which 3 things. Whoops. Large triggers are up. Small triggers are down. 2 divergence. And guys, you can go on, right? If price reaches 84, it's going to be likely to stop the market because of the rules of termination conditions. Divergence tells me it may, so you can go through and you just start reading and out loud, analyzing. What do you see? What does large triggers up and small triggers down mean? Do not have the advantage of momentum. So you go through and you vocalize, this is what I see and this is what it means regarding my rules. And you'll be amazed at how well you read your indicators. Tim, let's see what you got, my friend. Tim, you take a 50-50 long on the ES. You say it's not a good bottom. Good enough momentum. Tim's playing the good enough plan. I like it. But let's take a look. Odds favorable momentum, 50-50, 1 divergence. Tim, your entry comes down here. You're a little high, in a little bit high, but that's okay. Your stop's in place. And you say, you know what? I'm going to take quick profits at the first trouble spot. If the conditions change, I'm going to exit. Tim, congratulations. This is a picture-perfect execution of a high probability trend trade. The only thing that I might say is that if you waited for that mid-band, if you insisted on getting in at that area rather than a point above it, a 1.25 above it, you could have reduced your risk dramatically and gotten a little extra out of that one. But this is a good looking trade, Tim. Your stop was in the right spot, and that makes all the difference in the world sometimes. Nice job. I like it. Well, Tim, you're probably not gonna like this. But if it doesn't come back to an area inside of favorable large triggers, whether it's a mid-band fibs 1-to-1s, is it okay to say, not my trade? Is it okay to say that I'm giving away the advantage of where the market is likely to continue if it doesn't come back to it? That's a hard thing to say, Tim. You know it's really rough, and guys, tell me if you've done this one. I see. Tim's trying to get me on a technicality here. Absolutely, Tim. But let me find it. There we go. Going to use a limit order to buy or sell an area inside of favorable large triggers. That area can be fibs, mid-bands, or 1-to-1s. And Tim, I'm not suggesting that you did this, but what you'll find is that if you embrace the rules and the language associated, if I say, well, it says take a pullback to large triggers, there's my trade. And that may be your trade, Tim, if those are your rules. But if I'm studying the high probability trend trade, well, then my rule says a pullback to an area inside of favorable large triggers. And they turn out to be two very different things sometimes. Here's an area inside of favorable large triggers, perfect entry. There's an area inside of favorable large triggers. Exact same trade. One is 100% spot on, rule number 3, rocking it out. When this reversal bar happened, there was 3 ticks of risk on this trade as opposed to the 3 to 4 points on yours. Does that make sense? This is one of the things that I'm talking a lot to Mrs. Novak about right now, is don't just know your rules, understand what they mean. Like, understand really fully what it means. What does a pullback inside a favorable, to an area inside of favorable large triggers look like? Well, let's go to the education page. Let's go to the tutorial section. And guys, I hate instructions as much as the other guy. That's why I couldn't get my Elite Trader thing coming up the other day. Exactly, Tim. So sometimes it's a mid-band, sometimes it's a fib, sometimes it's 1-to-1, sometimes it's all three, right? And the key here is that they're inside of the favorable large triggers. So when we talk about an entry, and guys, this is amazing. This is the kind of stuff that makes this class amazing. Your window of opportunity on this picture, Tim, isn't from the top of the large triggers. It's from your highest point of support, which happens to be a mid-band, to your lowest point of support, which happens to be the 1-to-1s. That's your window. And the key here is, let me tighten this up, and I'm going to change the color here, is that window of opportunity falls inside of favorable large triggers. I don't think I've ever drawn this picture before. This is your window of opportunity that's inside of those favorable large triggers. Good. Well then, Tim, thank you so much for posting that, and thank you so much for asking the question. Guys, I can't read your minds, but when you drop stuff like this on me, I think everybody gets better. And it's not just Tim. Tim, this is your lesson today. But I guarantee someone else is going, oh, okay. I can tell you that Nexgen Jen, Tim, maybe this will make you feel better. Do you know where my wife has been entering trades until she really learned what it meant to get in at an area? That's it. And I kept asking her, why are you getting in so early? Why are you getting in so early? She goes, I'm at the large triggers. And I kid you not, Tim, 100%. You guys could have been the same person yesterday. And I had to have, but I had to have that aha moment for me, that the way that I'm teaching this may not create the clarity that I needed to provide for you guys. That the way I'm teaching this, it never dawned on me because I assume, through my own fault, that you guys know what I'm talking about. So there's your large triggers, right? And here's the cool thing. There's your window of opportunity. Does that make sense? She's going to watch this video and she's like, I told you that. That doesn't make sense, McCommons? No worries. So let's go through and let's do it. I know, right? All right, McCommons. I feel like I say your name wrong every time. I apologize. At the time of the reversal bar. Thank you for that. At the time of the reversal bar, we're gonna identify our window of opportunity. Are you comfortable with that, waiting for the reversal bar? So we wait for the reversal bar, we create the window of opportunity, and I think this is my new favorite picture. The rules say, and I'm going to type them out real quick, we're going to use a limit order to buy, since this is a long, a pullback, that's that small retracement in price, and now here comes the keywords, ready? At an area inside of favorable large triggers. And guys, this is for me where the language becomes important. Tim, your reversal bar is right here. after all of these up bars, it's this down bar that signals the beginning of the pullback. So when you get this down bar, my comments, where are my large triggers? That's what this yellow box is. This is where my large triggers are. They're favorable, they're strong, they're in the direction of the trend. This red box is my window of opportunity. And this window of opportunity extends from the highest point of support, which is a midband, to the lowest point of support, which is 1-to-1s. And I'm going to draw this This is the window of opportunity. Area where the market is likely to continue, and it is inside of favorable large triggers. Trade from the area, not the triggers. Typing too fast. I'm going to save this picture. So in the comments, it's not a reversal in momentum. So what it is let me go to this picture, and I think this will help you a little bit. When we put the 13.2, absolutely, Tim. When we put the 13.2 and the 5.1 next to each other, remember that on the 13.2, we gauge momentum, right? So this 13.2 is our overall temperature of the market. And initially, the only chart that you should be looking at is the 13.2. And we're looking at one bar. And I'm picking the one with the tail. So on this trade, or this chart, 13.2, I have strong triggers. I have smalls above the larger wide. I have no termination conditions. I haven't reached an area. So this is my overall temperature of the market. And what's the overall temperature? I have odds favorable momentum. I have no termination conditions. All right, so this is my overall temperature of the market. Once this overall temperature of the market has been defined, once I recognize that I have the advantage of momentum, that I have no termination conditions, now I come to my 5.1 chart. And it says I'm going to buy a pullback at an area inside of favorable large triggers. Well, the pullback begins with this reversal bar, this red down bar after all of these up bars. It says that this pullback, this small retracement in price, and remember my commas, that the 13.2 is telling me that I have the momentum. The 5.1 is a smaller, faster chart. I'm just trying to find an entry. This tiny little pullback on the 5.1 is what creates this tail. This tail is this pullback. How do I know where this tail is going to end? Well, this tail is most likely to end at an area of support, that's the wrong tool, inside of favorable large triggers. So there's my areas of support, the midband, the fibs, and then there's my large triggers. So it's that area of support inside of favorable large triggers that creates the window of opportunity where the market is most likely to continue from. Awesome. Tim, I'm going to send you a tequila. Thank you for setting up this lesson. That was a good one. Ed, let's see what you did. Ed, 50-50, 2 divergences. Pull back to the area of support inside of favorable large triggers. Ed, you're playing the odds here. Odds favorable. Area not broken. 2 divergences, perfect entry. Ed, I don't know if it's going to happen, and I'm not going to try and put any juju on you here. We'll see what happens in this trade, and then I'll come back with my lesson if there is one. Nope. 50-50, smalls outside. Looks like it worked out great for you. Nice job. Nice job. One of the patterns that I recognize when this happens, and just your stop was in the right place, and that's what makes this work, is Ed, here's one just for the patterns. When I get a pivot stop out creating my pullback, sometimes it'll take out that previous pivot. So your stop has to be in a great spot to make sure. And it was, and you managed this one beautifully. Nice job. And Elvis, a horrible form of pullback is with my stop loss because I'm not wanting to lose and losing huge instead. Yep, happens a lot. Tim, same picture. I don't know if it meant to be the same picture. Geo. Smalls are through, large are not. There is one divergence, but it pulls right back to a tiny little window of opportunity and continues the move down. Geo, very nice. Good picture. Nice picture. That's a 50-50 trade that yielded all sorts of money. And guys, notice, anything can happen triggers. 2 divergences, smalls inside. Look how the market headed back up. Show me what you got, Tim. Because that was the same picture. Here we go. Guys, learning should be fun, right? Learning should be a good time. You should have, and I'm just taking a picture of your picture because yours come up a little small for me. I want to make sure everyone can see it. There's that odds favorable, no terminations, right? You get in at the trigger rather than the area. Could have got you a little better. You take quick profits. And here we're trading into that termination condition, Tim. So this is a pretty dangerous trade. You've reached one-to-ones. Absolutely none of your trigger lines have broken through. You are trading into a termination condition. So I like your exit. I like that you didn't hold and hope. But this is very much an area likely to stop the market. That's okay. You've got to do it, right? Tim, you posting in this class is going to help you recognize more and more. You spend 7 days posting in this class, you'll see things that you never thought you would ever see, and it'll become super clear. Ah, you forgot to cancel your order. NG, I've done that one. Forget to cancel the order, gets you in short. That's an edge short. It's a little aggressive. Glad you got out quick though. I missed one up top, NG. Would you mind reposting it? Or I'll see if I can find it. This one? I love this one. You're not in at the area though. You're in above the area. I think we talked about this one. You had the odds favorable momentum. Everything was saying down. Your entry, NG, was at the area of resistance inside the... Awesome. Still a nice trade. Very nice trade. Didn't take it from the best area, but it worked out in your advantage that time for sure. Nice job. Smalls above the larger wide. Little unorthodox. McComa's a little unorthodox. One thing that helps me a lot, if you don't mind, Write your rules on your chart. And I only ask for this reason right here. I love that look, right? If I were to write rules on this chart, I would say strong triggers. I'd say room to the mid-band. I like that, right? But over here, I see large down strong. So what got you in? Because the second divergence hadn't printed yet. You had one divergence and everything said down. And then the other side of that is I may ask you, if you are committed to that long, why not get paid? Come up to that mid band all the way. Good stuff. Joel F., good to see you. Glad you're here. So sometimes when I see charts like this, I wonder what got you in? And I really ask because every trigger line broke through support. Everything is below that area of resistance. You're larger below the area of resistance. There's no termination conditions suggesting that you're at an area likely to stop the market. Does that make sense, McCommons? I'm not knocking your trades. You may have reasons for it, but I'm not sure what they are just yet. You're not either? That's okay. Man, I appreciate your honesty. I appreciate your honesty. Ed is saying, in the comments, Ed is saying that when the trend changes and he gets strength, Ed jumps in somewhere right where you got out, looking to carry to the next area. But he's working on a plan. So, if you get in the habit of writing your rules every time, well, what made me think? And it doesn't have to be right. Let me stress that. Your rules don't have to be correct. But if you write down what got you into the trade, we can talk about it. Targets were predetermined. Okay. If nothing else, what we might be able to do is you might end up with a trade that ends up in your plan. Because you may see this clear as day. This terrifies me. This isn't my trade. But it doesn't have to be my trade. Ed takes trades that I just want to reach through the screen and wring his neck. Ron gave me heartburn for 3 months. But both of these guys have studied their looks and they're comfortable with them. So it doesn't matter if I like it or not. Tell me your rules. Or we'll establish rules together. It's definitely advanced. It's fighting. It's fighting those large triggers. My trade comes when things roll here. But that's just me. I'm kind of a wuss. Elvis. Triggers up into a termination condition. Triggers up, triggers up, triggers up. You go short. Yep. Okay. Good luck. That's all I can say is good luck. Here's that crude oil, right? No reason to go long. Termination condition. Not saying it's a short, but probably not a conservative long just yet. But everything says up. I'm going to wait for it to be obvious. I'm going to wait for it to... Oh, hopefully. Hopefully. I love it. Tim, the larger up above the reversal bar, so it may continue up here, right? Guys, there's no reason to go long here. This is an area likely to stop the market. There's no reason to go short here. This is odds favorable momentum. And Nexgen Ben says pivot from nowhere, pulling back to the key resistance area. So Ben's pulling up as 21. That says area likely to stop the market. Right? McComas is just time frames. So on a small chart, on a 5-1 chart, you're going to see 3 divergences first. So on a small chart, 3 divergences may reverse the trend. You're going to see this on a 5-1. Maybe when something like this is happening on the 13-2. And if you see it on the higher time frames, it tends to push the market for more moves. But Ben made a great point. You're trading into an area likely to stop the market from a pivot that didn't come from an area and a larger time frame, has divergence up top, all the triggers through, pulling back to resistance with the small below the large. So Elvis, your shot at this one might be this little stab back, pull back with the second lower divergence. But if it's really going to hold, aren't these going to roll? Remember what we talked about before, Elvis? Let the smalls get to the other side, maybe wait for a pivot stop out with that much momentum. Give yourself some advantages. Good stuff. Guys, that's it. We made it. We are in overtime. John P., sometimes I get so excited about what we're doing, I forget to look at the clock. What a wonderful job, right? What a wonderful job when you don't look at the clock. You just enjoy it. Guys, thanks for being here. Thank you for posting. Tim, your post, I think, cleared up a lot of stuff for a lot of people. Thank you for that. Guys, don't be shy. There are no questions off limits, and they usually turn into great lessons. All right, guys, I am going to go dress warm. It is dreary, 57 and cloudy here in Dallas, Texas, but I'm going to go play 18 holes. So root for me. Try and hit that ball straight. I'll be back tomorrow morning, 9 a.m. We're going to do this again. And I promise we're going to do this every day until you guys get to where you want to be. Keep showing me pictures. Today I'm playing at a place called Tennyson here in Dallas. It's where Lee Trevino grew up playing. It's a fun course. Boomstick and taco at the turn. Amen. I'm still getting my game back. I'm getting better as I go through things. Ed took that trade that we talked about, letting everything get over. I just love it. It's my midlife crisis. And I enjoy being outside. And I'm not very good at it. So, oh, very nice. Very nice. Well, I'm in Dallas for another 4 or 5 days, so I'm planning on playing once or twice more before I leave. And then I'm going to go play around in Austin. Then I'm going to go play a couple rounds in Florida with my brother. And then I'm going to pack up the car and we're going to head to the West Coast. So I plan on playing golf all through the Southwest and up the Pacific Coast Highway. Life is good when your kids move out. Get a job. I got it. It's teaching you guys to be good at yours. Let's see if all that momentum pushes it up to a pivot stop out. It might not. It might. NG time, I've got the greatest gig ever. I love to teach. I absolutely love to teach. And every time I teach you guys, I get better at being a day trader, which means that the perk of doing what I love anyway makes me in a position where I can travel and do what I want to do and make money from anywhere in the world. That should be your goal, guys. Elvis, if it comes up and gives us a pivot stop out, I want you to send a nickel to me. Ed S., if it comes up and pivot stops out, I want you to write a formal apology for fighting these triggers. NG Time, you'll reach your goal. Keep posting charts. Keep asking questions. You'll get there. Everybody gets there, guys. You eventually hate losing so much that you follow a plan. And when you follow a plan, everything works out. NG Time, test again. I like it, man. You're good at pictures. So let's start writing stuff on it every time. Guys, that's it for me. I'm going to shut that down. I'm going to call it a day. You guys have an absolutely incredible afternoon. I'll see you tomorrow morning at 9 a.m. and we're going to do it all over again. Be good, guys. Thanks for being here.